Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Today, we bring you a no-nonsense approach to wealth-building strategies in the crypto market. We'll touch on active and passive growth models, as well as covering some of the most common enemies of healthy portfolio management. The show will provide deep insights into how crypto OGs like SoCal and Crypto Birb rationalize the market and their positions throughout any stage in a market cycle. A quick side note as you hear us refer to acronyms like TA and FA. For our purposes, TA stands for technical analysis. This refers to the practice of breaking down the information of a price action chart, commonly seen in Japanese candle form. FA refers to fundamental analysis, which looks at the core bones of a venture and its strategic relationship to the broader market or trend set. You will not want to miss today's wealth-focused episode, and your portfolio will thank you for it in this episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not. Trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions.
Today, we are joined by our guest, SoCal. SoCal got into crypto at the end of 2013, although he didn't join crypto Twitter for another 7 months or so, just if you're checking there. SoCal helped to pioneer spec mining along with others like Not So Fast and continues to mine and trade BTC and altcoins today, along with being a founding member of CoinHQ. And SoCal, for our listeners there who may not be familiar with it, why don't you tell us a little bit about CoinHQ and what people can expect when they visit the site?
Sure thing. CoinHQ is basically the brainchild of a group of old-time traders and I guess you could say crypto content producers, although that's not exactly how we started out. This idea we've kicked around for a while. It's basically, we were doing shitcoin talk. Myself, Dumb, Need a Coin, Noose, Bitcoin Dad, all those guys. We were doing shitcoin talk and realized there was a whole lot of division within the crypto content community. And not only that, but there was a severe lack of quality control, so to speak. There's people putting out low quality / blatantly incorrect info to huge audiences. And then there was people that were putting out really good quality content or info with very few viewers, listeners, whatever. So we all kind of got together and decided that we were going to make a network of all sorts of different crypto or trading related shows that would have to pass our own personal quality assurance, I guess you could say, and that we could get everybody together into one spot and just kind of make a one-stop shop for everything crypto content related, whether it's trading, TA, FA, mining, news, or just interviews and just entertainment BSing. We kind of have a little bit of everything.
Right on, man. And we appreciate you hosting this show on CoinHQ as well and everything that you're doing to put forth quality content and educational materials for the rest of the market. So appreciate you, man. Joined today, we are also here with Crypto Birb. Adrian, how are you doing, man?
Yo, I'm doing great. Thanks for having me here on this very podcast too. And that's going to be awesome.
Right on, man. Yeah, we have a really exciting show for listeners here. And I'm so thankful to have Sponge with us as well. Sponge, what's good, brother?
What's happening, man?
Sponge, as per usual, you have curated a number of tasty questions for our guest today. Why don't you go ahead and jump in with a question for SoCal to lead off?
SoCal, I wanted to get your thoughts on mining as a wealth creation vehicle. I wanted to know with your background and experience, could you tell us, can the average person get involved? How easy is that? And can you start with a low setup cost of, the average person maybe with 5,000 in savings?
Oh yeah, it's definitely possible. Your biggest determining factor, though, is going to be your cost of electricity. That's going to be your number one limiting factor on profitability. Like I said, I'm lucky that I have some of the lowest residential electricity prices in the U.S. So it makes it extremely easy for me to profitably mine. But I do know there are other spots in the country where the electrical costs easily go 3 to 4 times what I'm paying. So it would not be profitable to try and mine residentially there. Probably not even commercially, because quite often, commercial power is much cheaper than residential power. The startup cost is actually very cheap because you can start with just one GPU. You don't need to have these big, huge warehouses full of ASICs or whatever. In fact, I myself, I personally detest ASICs and stay away from them like the plague. Because it's very hard to, it's not impossible, but it is extremely difficult to turn a profit with ASICs, and that has very little to do with their actual the cost of electricity when it comes to those. It has everything to do with the fact that normally when a batch of ASICs is released, the net hash for whatever algorithm the ASIC is for on all those types of coins, net hash goes through the roof, which means difficulty goes up, which means rewards go down. So it's very hard to turn a profit with ASICs, and I just stay away from them. But like I said, you can start mining with a single GPU, like $250, $300 for a GPU, because most people already have computers, you know. So chances are it's not going to cost you anything extra other than 300, $400 for a GPU.
Awesome. Yeah. So I guess there is an entry level for the average person, but as you said, there's restrictions on electricity, which I guess is why obviously a lot of companies are heading abroad to cheaper parts of the world for that kind of thing. What about investing? What kind of sort of risk aversion should the average person have, do you think, when it comes to investing? As and obviously not everyone can be a trader, and we're talking about wealth creation. Obviously, a lot of people don't want to, or shouldn't at least, approach trading as a way to create wealth, because obviously, like, as we all know, the statistic 90% lose money. So what sort of approach do you think is wise when it comes to investing?
Obviously, got to preface this with all of crypto is extremely high risk. There's really nothing about safe investing when it comes to crypto. You know what I mean?
Oh, absolutely, yeah.
100% agreed on that.
But some of the things you can do, I actually recently just did a small, not really a review, but recently just checked out some of these services like BlockFi or whatever. And no, this is not sponsored. A service like BlockFi, they take your crypto deposit and pay you interest because they're also lending crypto. And the best thing is, at least for the deposit, earn interest portion, the savings, I guess you could say, portion of their service is available to almost the entire United States, which, as we know right now, is kind of a big deal since a lot of exchanges and whatnot are getting forced out. Now, BlockFi is not really an exchange per se. Like I said, it's more like a kind of like a savings account, I guess. It would be the easiest thing to equate it to. But something like that, you can do absolutely zero trading and earn interest on whatever assets you deposit, whether it's Bitcoin, Ethereum, Litecoin, USDC, or any other one of the assets that they accept. And yes, there's opportunity cost, blah, blah, blah. But like we're saying, for the average individual that isn't a highly experienced and skilled trader, this is a much lower risk way to grow capital within crypto with relatively, like I said, lower risk than actively trading.
Right on. Adrian, as you know, there are any number of listeners out here who, range from, complete newbie to, some of your OG buddies listening to the podcast. So I wanted to ask, in terms of general tips, no matter where somebody is in the game, if they're, sitting on a fat stack of thousands of BTC, or someone who's just trying to cobble together their first BTC, are there any kind of universal tips that you could provide on how to capture and increase wealth in this market?
Yeah, sure. More than obviously, yeah. I completely and totally and fully agree with what Sokal said about the fact that there is nothing unrisky about crypto trading. It's complete mess with regard to, it's completely insecure, right? It's barely supervised by Securities and Exchange Commissions, okay, all over the world. Same situation is in Poland. I don't think any like, not, it's not even about being 100% allowed, and on top of that, like, we are not a hub for startup projects from the crypto industry, from the blockchain. Okay, that's a huge shame. That's a huge shame, and but all in all, it corresponds only with how we as people, like in my country, but I think it just corresponds with every other country all around the globe right now, is that it comes with a big risk. It comes with a huge risk. So first rule of starting to, get interested in crypto trading is to be 100% aware that everything you do any day for any reason can be lost. Okay, we are not even talking about some simply mistakes that you I don't know, mix up some wallet addresses and or just flip a bad letter and bad character you put in your wallet address, right? And then everything is lost pretty much, or just I don't know, such newbie mistakes as simply sending I don't know Bitcoin to Ethereum address, right? Or similar. But so with all that, for any, I think it applies to every field literally in life. Before you take up and before you start actively searching for solutions, you need to do your own research first, right? Which includes gaining the knowledge needed to perform your goals. That should go without saying, but at the same time, it's completely not performed at all. Like if you go and watch around what people around you are doing, right? That's the reason why 80% of people were completely broke after the recent bear market in 2018. Okay, and having any rational comes from having plan, from having logical approach. And obviously, as I said, the part of this logical approach is being able to perform the analysis first, right? You need to come and perform the analysis for any investment. Any investment is simply buying it with risks. That should go without saying. You can lose your money just simply from taking out of your sock, right, hanging it on the wall, and then because there is a chance that wind blows and blows totally your money away from your hands. So definitely analysis part, right? And there comes the question for what type of analysis. And this well, obviously it's always best to know more rather than less. So my suggestion is definitely to go and learn about financial analysis for how it works on regular markets, on legacy markets, like what brings and creates a value, perceived value for a given asset to have any value whatsoever. And what does it stem from? What does it come from? How it's shaped? How people shape the value? This applies well to technical analysis, to fundamental analysis, to intermarket analysis, which is also hugely important for how the capital flows between the different markets and what kinds of events simply make it flow all around the markets. And on top of that, you just go ahead and perform the sentiment analysis, right? You just go and watch the fear and greed factor. This is a very starting point, and I would always start with the education first.
Thanks, Birb. Cal, leading it back onto you. When it comes to sort of fundamental analysis versus technical analysis, do you think there's one superior approach, or do you think a combination of both is better? And how do you go about it when you're picking out good projects to invest in or to trade?
Yeah, I actually think the whole argument between TA versus FA is stupid. If you're smart, you use both. I mean, there doesn't have, they're not mutually exclusive. So I use both, but I tend to use them differently depending on what I'm doing. I use FA more often when I'm looking to buy spot positions longer term on the higher time frames, looking at months to even years that I'm willing to hold these coins because I believe that they have solid long term growth potential and or benefits to holding long term, i.e., if it's a proof of stake type coin where it has interest that you can earn or something like that. I'll utilize FA more than TA when it comes to those kinds of situations. But when I'm actively trading on lower time frames, either intraday or even just within the span of a few days, then I tend to use TA far more than FA, simply for the fact that just how it works. TA is much better short term, for short term movements, and FA tends to work out better for longer term movements. So, at least in my experience and in my opinion. So that's basically how I use them. I don't stick with one or the other. I utilize them in entirely separate ways, but I do utilize both.
Right on. This is a question that I'd like to extend to both Adrian and SoCal, if you guys don't mind. But so often with any goals that we're looking to achieve, be it wealth, health-wise, or any category of goal, one of the biggest things we can do is to stop doing the things that detract from the accomplishment of the goal. So in terms of building wealth, especially in the crypto market, what are some of the biggest mistakes or capital eroding events that a new or intermediate or even an expert trader could stop doing in order to better preserve and grow their capital?
This is a very good question. And as much as I'm thinking right now, and on top of what Sokal has just said with regard to FA and TA comparison, which I agree with, of course, the greatest enemy of any big money, if we're talking about big money, some hedge funds or some big whales like individual whales or just simply more institutional supervised whales, I think is putting the capital, like making it work every single second. This is extremely dangerous loop to put your capital in. I think preserving your capital simply for protecting it well, while sustaining, I think this is the key word, performing the sustainable growth is simply the key. Okay, what you need to achieve to be rich at some point, you need to make sure that what you're doing is predictable. You need to make sure that what you're doing is simply working well, and it's just increasing gradually your equity curve, right, or your portfolio value for be it if you're like a fund, be it for your clients, right, or stakeholders, whatever, or just simply being an individual that wants to trade and just simply increase this stake over the time. Why I'm saying all that? There are different ways on how to protect the capital earnings and then still be profitable, still make it work, still make it increase for the portfolio parts like that. And one of the ways to go is just simply getting in touch with options, right? Hedging your capital instead of going and playing pure speculation wise. And just using purely technical analysis, etc. You can just go and use different, financial instruments, right? Different derivatives, many different options that you can go and put your bigger money in. Because if you're having like a big money, there is this effect of scale, right? You don't need to simply expose your capital a huge part to make big money. Because if you're playing with millions of dollars, even 1% move can add up like huge chunk of your money to on top of your portfolio. So this is, I think, the greatest trap for all the traders, because there's a tendency that the lower portfolio you own, the greater risks you're taking. Your risk aversion profile, let's say, is highly exposed to risk constantly, right? Because you're having like not much money, so you want to get rich even faster. So you're able to, just rely purely on emotions rather than rational reasons, just to make sure that you make this to 2x. Well, at the same time, as I already mentioned the other day, you end up being like a bait for a whale, right? To just grab the liquidity out of you, because you just simply don't make money when you have small money. So this is like a completely opposite extreme for preserving your capital with big money, right? If you've already earned big money, you need to learn how to preserve it. And one of the options is to preserve it with options, simply. And what I love about being able to use it is simply, as we discussed with you guys the other day, it was before the Backed launched, or it was even a live stream, I believe, that I was running back then. And I was doing some live charting, and we were talking. I can remember the potential impact of Backed, brought by options for the Bitcoin price, and I was very bullish on that fundamentally. It was not wrong, I assume, after the effects, like from the hindsight so far. And enabling bigger money to stake and to go with options, to hedging their portfolios with options that's still being profitable with the market. Like, I think that just gives the huge demand increase, huge demand and huge money influx to the Bitcoin, interest itself, right? Like if you go and watch the open interest, for example, like it's been in an uptrend like for a couple of months already. Starting from the end of the November, I believe. So this is only a confirmation how big money works. This is only a confirmation that big money searches actively for diversification tools, and they are still willing to be profitable in that and participate in potential huge financial revolution that Bitcoin might be, right? And this is, I think, great way to preserve your capital, but this obviously needs to own this capital at first.
Right on, Adrian. You bring up some great points there, and I want to extend the same question to SoCal, as he also has extensive experience in the market. SoCal, from your experience and from relationships with other traders at any point in the game, be it OGs, whales, or newbies coming in from other markets, et cetera. What are some of the most common kind of universal mistakes that you see that are preventing, profitable traders from maximizing their gains or cannibalizing their gains, and preventing them from really taking the next step and accumulating wealth?
It normally boils down to two things, which is improper risk management and impatience. That is mainly the two biggest issues, no matter who you are, how long you've been trading. Those two things will get you if you don't, handle up on them properly. If you don't practice proper risk management, one wrong trade could blow out your entire portfolio. If you made bad decisions and put way too much into one trade, you could blow out your entire portfolio in one trade. And then, when it comes to impatience, it could literally just be that, you overtrade yourself into a loss because, you're too impatient to wait for the move you need to get into profit. So you're constantly exiting and entering positions, just overtrading yourself to death. Because not only will losses add up and multiply, but all those fees will just eat up your capital. Like I said, those I've seen are the two pretty universal things that will just destroy a trader.
What sort of resources have you found useful personally for understanding the use of technical analysis or fundamental analysis? We've all seen those ridiculous YouTube adverts for learning how to trade, or whatever it may be. But where are the real places where we can find that kind of information to benefit us in wealth creation in this market?
Where I started to learn all my basics I guess you could say, was actually Baby Pips, www.babypips.com. And it's about Forex trading, but it 99.9% applies to crypto trading. So, I mean, the vast majority of it applies to, at least when it comes to the TAFA portions of the Baby Pips, educational materials. It All of it almost exactly applies to crypto as well. So I learned a lot of the fundamentals from that, and the greatest thing is it's all free. So it doesn't cost a single thing to do any of the courses on Baby Pips. But then after that, it was basically just experience and talking to other traders, discussing trade ideas with traders that I knew personally and trusted, stuff like that I knew were also competent traders, and just bouncing ideas off of each other, learning different things from each other. Uh, so that's basically it. Just learn the fundamentals from Baby Pips, and then the rest of it is by experience, really.
Same question to you, Adrian. What are some of the resources that you leveraged early on in your trading career, and some other resources that you continue to leverage to this day?
Yeah, sure. So back then, if I had known there would be such a platform as Nest, I would have said probably the Birb Nest, right? The Birb Nest website and free materials, obviously. But in all seriousness, though, as I already brought the point, I think that starting up with reading classic books is what gets you the actual edge, okay? What gives you the actual edge over the majority of people, because people are fucking lazy nowadays. Nobody will ever read a book anymore, okay? Because they are like one of my professors the other day on the School of Economics when I was doing my second master's. He was very. There was a discussion about the productivity and how it corresponds with the economics pretty much, and we came up to the conclusion that we as a civilization we are just on our way to make a full cycle, but a full circle as well with regard to our cognitive skills, because we kicked off from some pictograms, right? That's how we call it in English, I believe. Some pictograms or some ancient pictures, right, that they were doing on the wall. And what we end up doing right now is pretty much like coming back to the very same pictures, right? We developed a huge language. We developed all the language grammatical systems, right? And I think this is simply making a full cycle, because we are just getting back to the pictures. We're just getting back to the to the memes, right? I cannot live without memes, bro. But I gotta tell you, like, people are getting more stupid, and simply more and more stupid every day. And that's kind of like proven. To make it nowadays good selling book, for example, you need to put a lot of pictures, because people learn from pictures back again. And they can't watch videos, okay? They can watch videos, but their videos, like, they need to be fucking 13 minutes, because otherwise they would not watch this shit. Especially if you're coming for knowledge, people want to get fast. People want to get everything fast, and this is kind of like coming from the pace that we as a civilization simply put on our exponential growth for recent centuries. And I think definitely just following up on the good old books, coming back to these sources, getting a good read is definitely what you need to gain the edge over the other traders, or just simply people you meet. And so this is definitely like unlimited source. You can go and read books. You can go and read ebooks even, right? You don't need to have a physical copy for that. On top of that, I definitely started from reading books, and this is what I keep suggesting to everybody. On top of that, I also suggest it would be good if somebody is good at maths, okay? To be able to perform well in your money collecting, you need to be good at maths and counting money simply. And so it doesn't only apply to just some regular summation equations, right, etc. But it also addresses the basic logics behind it. And without the logical skills, without the skills of of logical performance, you're not able to simply learn, to absorb the knowledge, not even mention to further gain money from the knowledge. So I definitely send everybody back to the book. That's what I'm doing. That's what I was not even raised to do, but that's what I pretty much like come up as a conclusion with.
Yeah, and on the TA portion especially, you couldn't be more correct that for books that come from even Great Depression era market activity, a lot of those same kind of fundamental approaches to the market, still hold to form. Be it stock to flow models or other kind of market psychology approaches where the psychology of the masses hasn't changed. The vehicles with which we use to navigate the market perhaps have, but the basic tenets underlying the market have not changed. So people are drawn to what's new and shiny, but just because you're picking up a book from the 50s doesn't mean that it doesn't have timeless value in it that could be translated in today's market. So I would urge anyone to do their homework and read up. And that brings me to another point on the fundamental side. And in terms of pure generation of wealth, the highest returns are not going to be from swing trades or from scalps or from low time frame entries and exits, but they're going to be from early investments, projects that no one has heard of, and holding on to those projects until various fundamental aspects bear fruit. It captures the fascination of the communities on Twitter and Telegram forums about the next 100xer, the next 1000xer. Which is why so many people entered the market in the first place. They saw, the bull run and Ethereum, Ripple, and Bitcoin meant, thousands of new, decimillionaires, and think, oh well, I can find the next Ethereum. History doesn't repeat, but it often does rhyme. At this stage of the market, those kind of unicorn projects are going to be further and fewer between. But it's not just a matter of being in the market and participating day to day as we are. You still have to do the work. Barring some kind of huge capital migration from legacy markets to crypto, which I do see eventually happening. You still have to get down in the weeds and be it Bitcoin talk or various kind of subreddit forums, but by the time mostly by the time that you start seeing various 3-letter monikers with a dollar sign on them on Twitter, usually someone is trying to market the bag that they're already holding, which means that in a lot of cases you're buying someone else's bag, So I can't say highly enough about fundamental analysis and its capacity for generation of wealth. It takes work and it takes sticking with your guns, and oftentimes it takes time, and it takes kind of staring down a long dark hallway of whether or not you're sitting on a worthless bag that will ever amount to anything, or whether you have true conviction in your philosophy as to the true value of a project and why it will eventually realize that value. So for people looking to truly generate wealth, please do not deny the value of fundamental analysis and its value over time. So Cal, I see you in the chat here. I do have a question for you. With your experience from early on, you were engaged in the market, during the time that I mentioned, where there were many kind of new millionaires printed, from the great bull runs, that occurred a couple years ago. Within your community, could you tell us, without naming names, one success story of someone who kind of grew up, into those gains, and one basically cautionary tale of someone who had it but couldn't sustain it due to poor practice or a poor trading psychology?
Oh man. Okay. Well, I'll go ahead and name names, but because everybody knows them anyway.
Here we go.
Yeah, everybody knows them anyway. But obviously, your perfect success story, I guess you could say, would be somebody like Angelo BTC on Twitter. He's pretty quiet now because he made it. You know what I mean? He doesn't have to do shit anymore. That's why I'm saying he's the perfect success story, because he made it, he made his money, and he retired, more or less. He still plays the markets a little bit and tweets extremely rarely, but I remember back when he was young and hungry and active. So, like I said, Angelo, perfect success story right there, example. And then perfect fail story. Everybody in crypto should know this one, but Ash Drake. And that was a failure of trading psychology, as you said. He got far too tunnel visioned on the bear market, the first really brutal bear market from when Bitcoin originally hit 1,300 at the end of 2013, and then bled out to the 200s and actually wicked down to 150 at one point over the next 2 years. That just really obviously destroyed Ash Drake. How he dealt with the market, and he just became a perma bear. And when the market turned, he failed to recognize that and tried to short Bitcoin right before the 2017 run, and he got annihilated, and he quit Twitter. So, famously got annihilated. His famous last tweet was, "Wait for the bounce, then short the corn." And that was right before we started.
Oh, shit.
Yeah, that was.
I didn't know where that came from.
Oh, yeah. That was Ash Drake. That was literally his last tweet,
man.
right before the huge run that led to 20,000. Right before Bitcoin just took off at the very end of, Bitcoin took off at the very beginning of 2017. He tweeted that, I believe, at the very end of 2016. And that was basically his last tweet. So yeah, that's where that came from, was Ash Drake.
I'm picturing him saying, "Hold my beer," before jumping off the diving board into the sun. I'm just like, yep, good luck.
Yeah, that's basically what happened. So those are two very, very good and very public examples of A, a success story, and B, a big not success story. So, and that was, like I said, with Ash Drake, it was just a failure of his trading mentality, and he just got tunnel visioned on the bear market, and just let it destroy him. He didn't think that there would ever be another bull market again, and thought it was going to zero, and well, he got blown out. And he was a large successful trader at the time as well. So I don't know exactly how he got, how much he lost, but I would assume it was a very significant chunk.
Wow. Well, all I can say is, Ash Drake, if you're listening, my heart goes out to you, dude. In all seriousness, I hope that you're doing well, and I hope that you've learned. And if anything else, you can tell us. It's only money.
Well, last I heard, he's still alive and kicking. He's just no longer has anything to do with crypto.
Yeah, I can imagine the PTSD from that would have to be pretty severe. Well, guys, I know that we've given our listeners a lot to go on here. I'd like to invite you all to get together some final thoughts and any kind of nuggets that you'd like to leave our listeners with Sponge, did you have anything to start us out with?
Sure, yeah. Well, when it comes to fundamental analysis and technical analysis, I think my main point on the matter would be that technical analysis changes, it evolves over time. There are some timeless techniques, but there are things that work in some markets, don't work in others. You know, everyone will find their own personal edge when it comes to technical analysis, and that will take time. You've got to, you know, find those educational resources like Baby Pips or Investopedia, learn the basics, and get into it from there. But when it comes to fundamental analysis, at least, I think it is just timeless. I don't think fundamental analysis really changes. I mean, there's a broad variance in its effectiveness depending on how you use it, but certainly there's things like transferable skills from say stock traders. Like, I mean, I wouldn't call myself a stock trader, but from very early on in my life, I was involved with buying stocks and selling stocks with my dad. That's how I actually got into trading. And things like, you know, the fundamental side of stocks is a huge area that I think is transferable to crypto, like things like stock buybacks or earnings. I think in terms of crypto, those things evolved into like stuff like partnerships or coin burns, supply reductions, and product releases. And yeah, I think people can certainly leverage that kind of situation to give themselves an edge in the market. And I think also global events. We touched on that a little while ago when we had the podcast about the coronavirus, and how it may or may not affect crypto. Certainly in Forex, world events are like factor in at least the reaction from markets.
Catalyst.
Catalyst, yeah, that's the word. Yeah, they're certainly global events are a good catalyst for global market events, and I think that will, if not already, I think it will over time as the market matures. I think that will come into things like crypto. People potentially using, say, Bitcoin as a hedge because of the transferability of it. How we can, you know, make cross-border payments, whereas you can't do that with gold and things like that. There's a whole argument that side of things, but I think over the course of the next few years, if Bitcoin's legitimacy comes out, I think the fundamental side of things will actually play a larger factor long term than technical analysis will.
Very true. Adrian, would you like to give us any final thoughts for our listeners?
Yeah, sure. I would still emphasize, I would still put a main emphasis here for the education aspect. And anything you could take up on, and any, you know, I think what we've brought here with regard to all the failures and successes, the success stories and failure stories, is the most important part is to keep it actively improving. Simply, right? You need to put yourself as like into an algorithm loop, kind of, right? You just need to work like an AI, like a learning machine. You just need to go and come up based on the data and experience you gather. You need to go up and decide if the decisions that you made are the ones that should have made, and if not, then just go and decide and elaborate on why it didn't happen as you just simply predicted it to happen, and what could have been done better, right? And implement the changes. See how they you know how they impact the overall aspect of getting wins or not. And again, you need to monitor the later, right? Conclude and put yourself in the loop until you find a solution simply. And this corresponds not only with trading, but in actual every damn field of your life. This, as simple as it sounds, as obvious as it sounds. Now, I think unless somebody says that, it's not this obvious, right? And I think this is a huge edge of being able to stand up on your feet right after a huge loss, right after huge failure, right? You just choose not to give up. The moment you give up, this is when you fucking lose. Okay? And until you give up, there is like a huge variety of choices you can make to improve your overall situation, right? And so don't give up, keep learning, keep improving, and on top of that, just, you know, be surrounded with good people. Be surrounded with good people that just want to help you, right? It's not really getting easier if somebody around you is just trying to actually just, you know, hold you back, right? Like we all know how hard it is to get a good education in schools, right? The school system, the whole education system now worldwide is really suffering a lot, right? It's really performing bad. Like at least based on the data that I've got and on my own personal experience. And so it's hugely important to find the right people to follow, to find the right people to stay with, and just simply to learn. And everybody needs a mentor at one point. You just need to find somebody to rely on, be it some kind of like an authority, be it, you know, your family members, your parents, your, I don't know, fiancé. This way, like merging all of these steps that I mentioned, and this is, I think, when you sum it up, when you add it up all together, I think this is like a good equation on how to stay in the game profitable in the long term.
Absolutely, Adrian. You've given us a lot to think about there. What about you, SoCal? Anything that you'd like to leave our listeners with as we kind of wrap things up here?
First off, get as many educational materials as possible and go through them all. And you have to be aware that, especially if you're just starting, everything you put in, you are most likely going to lose. So obviously don't take out a third mortgage on the house and dip into the kids' college fund and all that kind of stuff to fund your account. Don't do that. That's a terrible decision. Like I said, just learn the fundamentals and be aware that you will most likely lose whatever you put into the market if you are just starting out, until you learn to be able to become a consistently profitable trader.
That's very true, man. And my final thoughts for listeners out there, this may get a little metaphysical, but I would just like to encourage people to invest in your own mind, and what we invest in, we pay attention to. So pay attention to where your mind is going. I may have mentioned my dad on here before, but he has a great saying that really resonates with me, and that's what you focus on increases. So if you want more wealth, and if you're really looking to generate more wealth, be of a wealth mindset, and that you are thinking on wealth and, generating positive emotions and really, trying to iconify the feeling of what a big win is, and exact more feelings like that, to really become a magnet for that kind of activity. If you've ever been down in your life with it, which I'm sure all of us have, we'll agree that there are certain times where it seems like nothing can go right, and where you just feel like a walking storm cloud. And there are going to be people in your life where you can say, oh man, nothing good can happen to this person. They just keep on, one bad break or one accident after another, yada, yada, So I would just say that what you focus on increases. If you focus on everything, like in the market, so many inputs, then truly you're focusing on nothing, So be a curator of your mind and what you pay attention to. If something is not making you feel good, then adjust the dial and, focus on solutions and where you can build, where you can grow, and your portfolio balance will reflect that. The Buddhists have a saying, if you want to see a man's past, look at his body today. And if you want to see a man's future, look at his mind today. I couldn't help but agree with that. Even though I'm not a Buddhist, they figured some stuff out. So be a curator of your mind and your portfolio will prosper. Guys, I want to thank you so much for being here today with us. We've had a great show and you've shared a lot of wisdom and knowledge with our listeners. So on behalf of our listeners, thank you so much. SoCal, thank you, brother.
Hey, thanks for having me on. I appreciate it.
Adrian, Crypto Birb, thank you for being here.
It was a pleasure as always. Thanks, guys.
And Sponge, my fearless co-host, I couldn't have done it without you. Thank you, brother.
I saw you, man. My pleasure. I'll catch you on the next one.
Just as in the previous episode, I promised to choose in this very episode another winner for the giveaway. That was pretty much like focused around our 50% discounts and promotions, etc. For every the Birb Nest subscription program, exclusive subscription. And this very giveaway, okay, as it says, was about free hoodie of one's choice. And it was the steps to like, retweet, and follow the Birb Nest, and simply let's copy paste the link for the random retweeter as just a recent time. I'm marking out again that I'm not a fucking robot, and this fucking time I need to go and pick these autobuses. Okay, that's crazy. Pick a winner, and the winner is Renatko. Hey yo, our happy member already for the Birb Nest. And this is very, very good, and I'm very happy that that the free hoodie of your own choice goes to you and to your home place, and I'll make sure to go and ship it to you free of any cost. And yeah, congratulations on it. You deserve it. Well deserved. Congrats. Cheers.
I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where the official team handle is @TheBirbNest, where SoCal can be reached @SoCal_crypto. Bagsy is @I'mBagsy. Birb is @CryptoBirb. Sponge is @SpongeCoinBob. And I'm @BenjaminT1717. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us by visiting thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. After much demand, we are excited to finally introduce a host of delicious merch. Starting with my favorite, an assortment of comfortable hoodies. You can now sport your Birb Nest pride in style with our branded goodies. Be sure to visit thebirbnest.com/merch for more info. And don't forget to check out @CryptoBirb on Twitter for ongoing merch giveaways and more ways to participate with our community. This podcast has been brought to you by the Birb Nest. Thank you, and trade on.